Welcome to the March edition of the VOF monthly update. And it's an important update. We're into the first quarter of the year. And the last time we were with our audience was to discuss the interim results last year. But now we turn back to the portfolio. And I'm delighted to have join with me today Truc Ngo. Truc has been with the firm for now
2 years.
2 years, and Truc is our banking sector coverage expert. And we're going to delve into the banking sector today. But before we do, perhaps a bit of an update on our performance. So it's been a very tumultuous first quarter. And specifically in March, we saw the Vietnam index go down by almost 12%. And if I recall, the last time we've seen such a correction was actually March 2020 on the onset of COVID. So in terms of our NAV performance, it's been very resilient. We've been down only about 6.6%. And then if you sort of zoom out to the full quarter, the wider index is down about 6.6% for the year, whereas the NAV for the portfolio is down only 2.5%. And we're going to sort of try to understand and break that down. And an important part of that performance or outperformance comes from the financial sector. So today I'd like to cover with Truc basically 4 areas. One is how are we thinking of the sector in context of what's happening in the macro and policy. 2 is what actions we're taking in terms of portfolio activities. 3 is to sort of pull back the lens a bit and sort of understand how you think about the framework of managing this portfolio with the financial sector within this portfolio. And at the end, we'll end with some ideas of you've been working on and an outlook for the year. So to put into context the financial sector in terms of how it sits in our portfolio and sort of the wider index.
So right now we have around 10 investments in our financial sector, 8 of which are banks and 2 non-banks. And the total weight of the financial sector in our NAV is around 30% versus the weight of the financial sector in the VN index of around 37%. Most of our holdings are large cap.
Great. So in terms of about $300 million, large cap companies, high quality. And we'll go in and talk about some of these in a moment. We normally start off the year going to visit the banks, right? And we started that at the start of this year. We came away with some core messages and core ideas. And then we're now into the second half of the year, second quarter of the year. We're in the middle of AGM season. Again, we're seeing many of these banks. What are the takeaways from these conversations we're having?
So we started the year. We see that it is unclear how the monetary policy will roll out. People are waiting for the new leaderships, especially the new state governor. And right now, with the new leaderships taking their role, and we have a new state governor now, the monetary policy seems clearer. The actions of the SBV, the target of the governments right now, is also clearer.
And then sort of in context of where the markets are at the moment, both global as well as local, clarity is something we definitely need. So in terms of what the state bank governor is now sort of setting in terms of policy direction, let's talk about monetary policy. What are we seeing the developments there?
So the state governor wants the interest rate to lower, obviously to support for the growth of the economy. But we see that the credit and deposit gap right now is quite huge. So we think it's very hard to lower the interest rate significantly. And we may live with a new normal high interest rate.
And in fact, we've been seeing that in this first quarter. I mean, we sort of started the year with rumors of higher borrowings for developers, and now we're seeing that spill over to mortgages. And now we're seeing sort of banks offering very, very high deposit rates, right? So this liquidity crunch that you talk about, that gap that's coming between credit and deposits. They need to build up that through perhaps offering higher deposits, right? So again, it seems to be a challenge if you want to implement sort of monetary policy whereby you want to lower rates to help stimulate the economy, right? So within that, what action plans have you sort of taken in this first quarter?
Actually, in the first quarter, we transacted a total of 120 million USD, in which we take we took profits, 60 million, and we bought into new investment opportunity, 60 million USD.
And that's quite significant because, $300 million portfolio, you've trimmed 60 million, you've invested 60 million. So, and we like to talk about sort of the inertia, the alpha that we generate through these type of restructurings and activities. What was the alpha that you were able to generate?
So we generated around 4 to 5%.
Excellent. Wow. So you think about that. It may not seem a lot, but that's really actions taking place in 12 weeks, right?
Yeah.
The first 3 months of the
Yes.
year. And that we're going to, if we sort of project that out to the rest of the year, that those actions will compound and accumulate. Well done. So in terms of, maybe taking a step back and helping our viewers, our investors understand, what is sort of the framework that you work around when you think about the financial sector in our portfolio?
So we actually divided the financial sector into 3 buckets. The lower risk bucket, where we invest into those with strong deposit franchise and quite defensive names. For the medium risk bucket, we invest into those with higher growth, but risk remain under control. And for the higher risk buckets, we invest into those higher growth, higher beta, and have higher exposure to real estate sector.
Yeah, and I think if we talk about the activities that have taken in the last quarter, we almost have to think about what's been happening in the last sort of 18 months, right? So since you've come on, there's been a tremendous amount of activity within this financial sector, and you've been able to, like you say, rotate out of perhaps some names that have been good performers, but low beta names in our portfolio, and you've rotated those into some higher beta names, higher growth, higher performers. Can you sort of illustrate some examples of those type of banks we're talking about?
For example, in the last 18 months, we also add MBB and CTG to the portfolio. MBB actually delivered an earning growth of around 18% last year. CTG around 37%.
Wow, standout performers. And in terms of relative to sort of the wider sector itself, I mean, earnings growth of the sector last year
Of around 14.5, 15%.
15%. So these are names that are higher growth, high earnings, but within your sort of framework, well managed, well controlled, medium to lower risk type of profile banks. That's great. And then sort of, why does this framework matter?
Because it will help us to adjust or allocate the weight to each bucket depends on the macro economy of the liquidity system and on each individual bank growth momentum as well.
And I think that's important because, as we start this conversation, we're entering sort of in a very uncertain phase. We've gone through a lot of geopolitical tensions, the impact of potentially a higher inflationary environment from higher oil prices, and sort of the second and third order effects that can come play. On top of that, you talk about the liquidity concerns here and the liquidity conditions, the tighter liquidity conditions here in Vietnam. And again, that's going to play into some of the banks that we talk about. So Truc, so importantly, let's look at the outlook for the year. We talked about 2025 earnings growth at about 14-15%. What are you looking for 2026 and beyond? And more important, what are the opportunities that we're looking at the moment?
So we're looking for the earning growth for the financial sector of around 15 to 17%. And we are looking into opportunity both in the listed and privately negotiated deals, both either in pipe or in private equity. We have seen a lot of opportunities around recently.
Yeah, and that's really important because we've updated our audience of some deals we did last year in terms of the IPO of Techcom Securities. We've just completed an investment into one of the leading state-owned commercial banks through a private placement at a significant discount to the prevailing market price. And then I think what's interesting is that you're always saying that there might be even pockets of opportunity in the private equity type of transactions in this space, which we don't see a lot of.
Yes.
So I'm really looking forward to updating our audience as the year progresses on some really important and interesting things that are happening in this sector. Truc, thanks very much for joining us.
Thank you.
And thanks for joining us for the March update on the VOF.